Welcome back to the channel. If you're new here, this channel is very new. We're growing fast and we talk about something most people don't really talk about or understand until it's too late. Real money. Not numbers on a screen, not trays, not positions, but actual physical gold and silver. And today, this one matters more than usual. Because this isn't just another slow news week. This is a federal open market committee day, or FOMC. The FOMC meeting is right now, and the entire market, not just metals, everything is waiting on one thing: what comes out of that room. Because one sentence from Jerome Powell, one shift in tone, can move gold and silver instantly. And that's exactly what you're seeing right now. Feels so strange, isn't it? Because if you look at the headlines this week, gold is pulling back, silver is pulling back, and the narrative being pushed is simple. Metals are cooling off, momentum is fading. Maybe the run is over, but if you slow down for just a second and actually look at what's happening underneath all of that, you realize that it's not the full story, not even close. Because right now, gold and silver are being pulled in two completely different directions at the same time. And the Fed, this meeting, is sitting right in the middle of that tension. On one side, you've got pressure, real pressure, interest rates, a strong dollar, bond yields, all of that works against metals in the short term. Because when rates are high or expected to stay high, money moves. It flows into things that pay you to hold them and away from things that don't. That's why you always hear gold doesn't pay interest, silver doesn't pay dividends. So when the Fed signals higher for longer, metals usually feel it. That's the reality. And that's exactly what the market is trying to figure out right now. Not just what will they do today, but what does today signal for the future? Because there are really only a few paths from here, and each one hits gold and silver differently. If Powell comes out and sounds hawkish, meaning he leans into higher rates, or even just suggests that cuts are further away than people expect, you could see metals drop fast. Not because the fundamentals have changed, but because expectations changed. Because the market is forward looking. It reacts to where things are going, not to where they are. So even a subtle shift in tone can trigger selling. Now, on the other hand, if Powell softens, if there's even a hint that rate cuts are getting closer, that inflation is under control, that the pressure is easing, gold and silver could move the other direction. And they could move quickly because there is a lot of money sitting on the sidelines right now, waiting for that signal, waiting for the confirmation. And then there's the third scenario, the one people don't talk about enough. What if nothing really changes? What if the Fed stays neutral, careful, measured, non-committal? That might sound boring, but that actually creates something else entirely: confusion. Because when the signal isn't clear, markets hesitate. And when the markets hesitate, you get exactly what we're seeing right now: choppy movement, mixed signals, no clear direction. And that's where we are right now. But here's where it gets interesting. Because while all this short-term pressure is playing out, everything else is pointing in the opposite direction. You've got geopolitical tension rising again, instability in parts of the world that matter, oil moving, Inflation not fully gone, just quieter. And normally, that kind of environment would push gold higher. That's what it's designed for. That's why people hold it. But right now, it's not reacting the way people expect. And that disconnect, that feeling that something isn't lining up, that's where most people get uncomfortable. But if you stay with it, if you don't look away, that's where things start to make more sense. Because underneath all of this, the actual fundamentals have not weakened. They've gotten stronger. Central banks are still buying gold, not slowly, but aggressively. Countries are still diversifying away from the dollar, quietly, but consistently. And silver is in a situation that I don't think enough people fully appreciate yet. We are multiple years into a structural deficit, meaning more silver is being used than is being produced. And that's not temporary. That's driven by real demand. Solar, electronics, energy infrastructure, AI. All of this requires silver, and it's not optional. It's necessary. So think about that for a second. You've got a metal being consumed faster than it's being mined. At the same time, the price is pulling back. And right in the middle of that, you've got a central bank meeting that could move the price in either direction based purely on tone, not supply, not demand, tone. And that's where a lot of people start asking, is this weakness or is this pressure building? Because those are two very different things, but they look almost identical right before they separate. Now, if you go over to Reddit, forums, comment sections, you'll see it immediately. Half the people are saying, this is the dip, this is the opportunity. And the other half are saying, maybe it's over, maybe it's already ran. And that split, that tension, that's not a bad sign. That's exactly what uncertainty looks like. And uncertainty is where positioning happens, not after everyone agrees, but before. Now, here's where this connects back to something people talk about a lot, the difference between paper and physical. Because what you're watching right now, this is back and forth. This disconnect, this feeling that price doesn't fully reflect reality, it makes more sense when you realize the price you're looking at is heavily influenced by paper markets, contracts, leverage, positions that can be opened and closed without a single ounce ever moving. And again, that's not a conspiracy. That's just how the system is structured. But it does create something important because in the short term, price can move in ways that don't fully reflect physical demand. It can be pushed, pulled, influenced by expectations, especially around events like today. But in the long term, physical matters eventually. It always does. And that's the part that doesn't show up in a headline. That's the part that builds slowly underneath everything. So when you see silver pulling back, at the same time, demand is rising, at the same time, silver is tightening, at the same time, the world feels more unstable. And now, with a major Fed decision sitting right in front of it, you have to ask yourself, what happens when one of these forces finally gives? Because eventually something has to. Now, I'm not here to tell you go all in. That's not how I approach this. You guys know that. I've already converted what I consider a comfortable amount of fiat into metals without touching my emergency fund. And right now I'm in a different phase. I'm watching, I'm saving, I'm waiting for levels that make sense to me. If silver comes back into that $60 range, I'm interested. If it goes lower, I get a little more interested. But until then, I'm okay being patient because this isn't about reacting to one meeting, one headline, one day. It's about understanding the bigger picture. And right now, that picture is layered. Short-term pressure, long-term strength, policy decisions, physical reality, all colliding at once. And that's why it feels confusing, because it is. But confusion doesn't mean something is wrong. Sometimes it means something is building. So whatever Powell says today, whatever the direction the market moves in the short term, up, down, or sideways, just remember that doesn't automatically change the underlying story. Sometimes it just delays it. So if you got any value out of this, hit like, subscribe if you're new. We're just getting started here, and I'll see you in the next one.